Barrel Rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm Professor Code and this is the Forex Super Model weekly review for Monday the 22nd of the 3rd to Friday the 26th of the 3rd, 2021. Right, we've written up the weekly flows so far. So basically we've got the euro dollar minus 81, so this means over the period, over the week 22nd to the 26th, the euro dollar as an FX pair lost 81 points or pips. Euro yen plus 27, euro pound minus 25, pound dollar minus 50, pound yen plus 66, and dollar yen plus 101. If we look at the actual flows, then we've got a positive opposed driver in the dollar at plus 232, front and back door flows mainly coming out of the yen at minus 194, out of the euro at minus 79, and the pound was the positive rock at plus 41, and this was an activity of plus or minus 273. So over the week then we've had dollar strength at plus 232, so dollar strength has been driving the market. We've had front and back door flows, and we've had predominantly yen weakness, a bit of euro weakness, and a small amount of pound strength. But that obviously doesn't tell us the whole picture. We need to look at the daily flows which make up these weekly flows. So don't go away. See you in a minute. Right, welcome back. We've written up the daily flows then. So Monday, the first day of the week, the 22nd, we've got a positive opposed driver in the euro. So we've got front and back door flows mainly coming out of the yen at minus 157. The dollar next at minus 61, and the pound was the positive rock at plus 48. Activity plus or minus 218. We'll rattle through these and then we'll do the analysis at the end. Right, Tuesday the 23rd then, we had a positive opposed driver in the yen. Front and back door flows mainly coming out of the pound at minus 278, out of the euro at minus 192, and the dollar was the positive rock at plus 169. Activity plus 470. Significant rise in activity on Tuesday. Right, Wednesday then, Wednesday the 24th, negative opposed driver in the pound, minus 128, front and back door flows, mainly going into the dollar at plus 115, into the yen at plus 59, and the euro was the negative rock at minus 46, activity plus or minus 174. Thursday then, we had a positive opposed driver in the pound at plus 225, front and back door flows mainly coming out of the yen, minus 160, and then out of the euro at minus 113. Dollar was the positive rock at plus 48, activity plus or minus 273. And finally, Friday then the 26th, we've got a negative opposed driver in the yen at minus 233, front and back door flows. We've got the positive flows mainly going into the pound at plus 176, the euro at plus 105, and the dollar was the negative rock at minus 48. Activity plus or minus, I haven't written it, what was it, 281. Right, so basically, so over the week then, Monday we had the euro positively driving, Tuesday we had the yen positively driving, and then we had a switch. Wednesday we had the pound negatively driving, the pound positively driving on Thursday, and the yen negatively driving on Friday. So you can see that the markets have been absolutely swinging backwards and forwards all week. It's been a yo-yo. We've had positive to negative drivers consecutive days, so the markets would have been very difficult if you were trading short term, I've no doubt. Right, we'll stop it there and then we'll do the analysis. Right, we're back. So what was actually happening this week in terms of data and noise? We had Monday, we had China rates decision. Tuesday we had relatively soft GBP claimant count. Wednesday we had soft GBP CPI, positive German manufacturing PMI, and positive GBP PMI, and soft US durable goods. Thursday we had Swiss National Bank rates decision and US GDP, which was mildly positive. And Friday we had positive German business climate and a positive US Michigan consumer sentiment. Right, and if you look at the asset classes in general, so if you got to look at the US dollar index, so if you look at that, you've got this situation. Basically, it broke the high, it came back, it broke that high, and it's still operating above that second high there. So that's where the dollar index is. It's quite pumped. Gold basically has come off and it's struggling. It's about 0.2 from our modelled floor. Obviously, with a consistently high dollar, you'd normally expect gold to be struggling, and it is. Oil, right? Oil is basically looks like this. It's about 0.4 from the high. It's come back a little bit. There's a little bit of a story with oil. We've got OPEC on meeting on the 1st next month, and we've got this container ship stuck in the Suez Canal. So two things to bear in mind for oil. Wall Street then. Well, Wall Street, basically Wall Street broke the high. It came back to the previous resistance, and it's now operating sub previous high, sub the last high. S&P basically it broke the high, but not as impressively as Wall Street. It came back, and it's got a similar situation. It's just above the old high, but not up to the new high. So, and then we've got the tech. Basically, the tech never made it above there, and it's come back to about 0.4 from our model floor. So, bear in mind the tech was severely pumped last year. So, relatively speaking, this is a little bit of a distraction, saying the tech is underperforming. Yes, it's underperforming in the short term, in the last month or so, but overall it is not underperforming. But that's just a side issue. Right, US 10-year and the bond. What have we got on the US 10-year? We've got this sort of situation. It's 0.25 from the floor, and this is the price. So the yields are relatively strong, and the bund sort of looks like this. It's 0.5 from the floor or the top. Take your pick. So relatively yields have strengthened up a little bit from yesterday on both areas in terms of the US 10 and the European bund, but relatively the US yields are stronger than the European yields at the moment. Right, copper. Remember, copper basically had these five pumps. It came back to the second pump. It went back to base camp. It messed about. It's now operating basically at the second pump. So it likes that second pump. It's the top of the second pump. Right, and finally we've got US steel. US steel looks like this. They sold it off at the double top, and it basically came down, and it's now recovered significantly. It's 0.2 from the top in our model terms. So US steel has come back up. Copper's sort of struggling at the second pump, etc. So that gives us a bit of an overview. Right, we're going to just start there and then do the final analysis. Right, welcome back then. So what's really happening in the markets? Well, as I said, we're positioned long AUD dollar and short NZD in terms of the euro, the pound, the CAD and the AUD. Right, and we're currently about plus 2,150 points. So that's approximately profit. Right, so why are we positioned in this way? Well, basically the scenario at the moment is obviously we're just coming up to the end of the first quarter. This is probably why we're getting this this resistance to for the flows to behave. But our general macroeconomic scenario is a rise in the China activity. Bear in mind that we're going to do this sister video, which is the data cycle for the period of the 22nd to the 26th. It will fill in the gaps of what we're saying here in terms of the data cycle. But basically we've got a rising China situation. We've got their 100-year anniversary of the People's Republic. We've been told they want greater or equal than 6% GDP growth. So if you get a pump in China, you're going to get a transmission through to the AUD, which is why we're positioned long AUD dollar. So you're going to get a rise in commodities. Commodities are going to go up. You're going to get an equity rise off the back of numerous things. We've got the stimulus, which is basically a rise in G, and in the Keynesian sense, this is an injection, which is going to have a multiplied effect through the economy, and we've done videos on understanding the Keynesian multiplier process if you want to look those out. So we've got stimulus. This is hitting the go button. We've got a rising China. We've got a dollar, which the Fed basically has said is going to be not touched to about 2024 in terms of rates. So you're not going to have a rates rise till 2024. They're going to try and run the economy relatively hot. So this a falling dollar or weak dollar will play into commodities. Commodities will like that. This will stimulate further economic growth. And normally, as I said, we're short the NZD because the NZD is, if you look at our complex positioning, it's about 67% from the model top. It's only the Swiss franc which is above it, and therefore when these transmissions kick in, if you look at these particular pairs, these four pairs, the Euro NZD, the Pound NZD, the CAD NZD and the AUD NZD, they are operating basically on our scale for individual FX pairs. So it's 0 to 9. We're right up here. The NZD is right up here on those pairs, and so the only place the elbow room's going to go is there's going to be flows into the Euro NZD and the Pound and the CAD AUD relative to the NZD. And the NZD data cycle is rolling over, and we'll talk about that more in the next video. But basically, we've added to our positions. We're probably, what we're running now, probably about 21 give or take full trades in these positions. So we're building up a relatively sizable position. As I said, we're about 2,001. Our peak has been about 2,900 points, and we're just going to wait for these transmissions to take effect. So hope that was useful. I hope you had a good week trading. Try and catch the sister video, which is the data cycle. If not, see you Monday for the daily briefing. Thank you very much.